like a reviver. Rahul is from your side, is it? Okay.
No.
No,
Rahul.
Rahul is part of Voltrium.
Oh, okay.
Okay.
Yes.
Yeah,
Okay.
hi.
Co-founder at
Hi,
Hi,
Voltrium.
Rahul.
Shivnanda. Hi.
Hi,
Hi,
Rahul. Good
Pankaj.
to meet. Good to meet. So there's Rahul and Bhakti from Voltrium. There's Preeti. Preeti, just guys, I suggest for the benefit of everyone, just intros to you because
That will help.
us
Yes.
new on this mode. Huh.
Yeah, Shanaz, I am Rahul and I'm based in Pune. I'm the co-founder at Voltrium. So I work along with Bhakti. And we're
Nice to meet you.
we're developing a renewable energy trading platform based on blockchain.
Yeah, it sounds very cool.
Sounds cool.
Huh?
Working is it?
No, but
Nice
when
to
you
meet you, Rahul.
say, yeah,
Same
it's a
here.
good.
Thanks so much. Wonderful. Looking forward to the session.
Thank you. Preeti, pretty quickly.
Hi guys, I'm Preeti. I'm the founder of Kaizen Skincare. I'm based out of Gurgaon. So this is into plant-based botanicals mostly. I'm in a phase of rebranding at the moment, so there's not much activity with the brand. It's almost 2 years old, and after going after learning from my experience in the market till now, I decided I needed to do rebranding and come up with better versions of the product. So that's what's happening now. So this is a lean period for me, but hopefully by the end of December and January next year, I shall be able to kick off like in the proper way again, once again.
Yeah, and all the samples will come to this entire team.
Yeah, sure, for sure.
Nice to meet you, Preeti, again.
Same here, Pankaj. Thanks.
And then we have Rajesh. I think we heard what Rajesh does, that Vasudev Kutum piece. Pick it up
Yes.
on right.
Hello guys,
Ash,
my name is Rajesh Kumar Singh. I'm a founder of Vasudev Kutum Education Private Limited. We are from company, and we want to provide entrepreneurship training to youth of India. The fields are Internet of Things, artificial intelligence, machine learning, art- and energy, transportation, sports. These are the fields where we would want to provide the entrepreneurship training to youth of India.
nice.
Nice to meet you, Rajesh.
Thank you, sir.
Thanks, Rajesh and Ashish.
Yeah, hi, good evening all. My name is Ashish and I'm from Nashik and I'm a founder of Claviger Systems LLP. We are working into the cybersecurity field since 2017. Recently, we have developed a new platform which is based on the cybersecurity services and currently which is in under development. Okay. I
Okay.
hope so. Our product will be launched next year within February 2024.
Okay.
Interesting. Okay, Pankaj, I think we
All
leave
right.
the stage for you then.
Yes.
Like I said to everybody, and I'm just doing a little intro to Pankaj. Pankaj is working with a lot of startups, and he has very kindly offered to get a financial point of view, going for you, which also includes, government interactions, as and when you need them. So I think it's going to be a very valuable session for startups, and feel free to keep the conversation fluid, collaborative, and keep asking questions as we go so that it becomes like an interesting session for everyone. Thanks so much, Pankaj, for making it happen for
Yeah,
today.
no problem. Thank you. So, hello everyone. My name is Pankaj Chawla. I run an organization called MSME Strategy Consultants. We are based out of Delhi MSMEs. The session today is on the money management. How do startups manage their money in the best possible way, considering the fact that money is of scarce utility, it's a scarce commodity, and we should use it wisely. The session currently is aimed right from the simplistic, basic needs or utility of money to the complex possible. But just because we've got startups in different ages, what I have kept as of now is very basic to start with. Wherever you need more information, you can interrupt me and ask more questions which is complicated or which is to your requirement. And if at all you're not able to finish this in this session, you can in any case drop a note in the WhatsApp group to have a specific session for a specific subject, and I'll be happy to do that. Right? Okay, so let me quickly share my screen and take you through what we want to do. Can you see my screen?
It's loading. Yeah. This is the finance management and business. Everybody can see, right?
Yes.
Gotcha.
Yes.
Yeah.
Okay.
Yes.
Okay. So the idea is to cover three aspects. One is money management. Second is importance of contracts. Third is the regulatory and the legal aspects. All three important, critical for these startups. So in the money management, we'll talk about planning and control. We'll talk about cash flow management, MIS reporting compliance, and how do you get educated through that system. What's the accounting software that you should use for the scale that you are at? Budgets, why they are important, and financial goals. Right? Okay, so let's start with planning and control. In simple terms, it is the objective of every organization to look at managing their finances as effectively as possible. Right? But how do we do that? The reason 90% of the startups fail in their initial stage of business is because they do not have a system built in to track their money, track where the money is going out, what are the sources of money, and so on and so forth. Hence, planning your finances well right from the day one is of essence, and alongside is the control of the money. Now, if I was to share with you what steps should we take, we should have a budget in place. That budget should talk about what's the income that I expect to receive if I launch a product on, let's say, day one, two, or maybe day Z. What is the expense that I'm incurring right from today when I am maybe yet to launch a product? I have a product, it is in the market, but yet to get sales and traction. What expenses I should be incurring or I have been incurring, we should keep a track of it alongside the frequency in which the expense has to be incurred. For example, a salary for a staff, let's say you have got one person, two people to begin with, that has to be monthly expense. You should plan for it on a monthly basis. If you are doing something on Meta, then you should plan for it basis the campaigns that you want to run, basis the market that you want to requirement of that campaign. You should have some number onto that, and then figure out how is it that it makes sense for you, which month, which year in your business you'd be able to break even. Break even is an important concept. Break even does not mean that I break even for that particular month in business. Break even means from what date will I start to be positive and continue to be positive. So, just to simplify further, break even is when your cost is equal to your revenue. This is when you break even. When you cross that stage, you become profitable, cash profitable. When you are before that stage, you are cash negative. So, if you break even once, let's say in a 12-month cycle, that is not a break even point. Break even point is a point when you consistently remain positive. Budgeting helps you define that for your business and refine it for yourself of how you should run your business so that you remain positive once you have achieved the break even point. So these two things then become imperative. Now with this you have to do the forecasting, right? And forecasting is a tough exercise. When you say sitting on month 0, how would month 12 look like, or how would month 18 look like, or how would month 60 look like? Because a plan is generally a 1 to 3 to 5 year plan. So you need to look at what are the market trends for the particular industry that are emerging for future, for which you can obviously refer to a lot of research papers, how the consumer behavior is changing and all of that. And performance to say, with whatever is happening in market, how do I intend to fare? For example, let's say in a huge market size intend to cover only 1% of market, and then say that 1% of market gives me enough revenue so that I, to begin with, start to at least break even or make some profit, however small it may be. So that's your business performance basis what is expected to happen in the market. So this then helps you adjust your strategies or your wings in the right direction. Now when you do the forecasting, there is one thing which is beyond your normal reasonable control. That's acquiring customer or taking money out of the pocket of the customer. So which means revenue. If revenue is not in your control to begin with on day one, what is in your control? In your control is cost that you incur. You should be wary of what cost are you incurring, under which heads and elements, and then figure out, is it optimal or not? Is there a wasteful expense that's happening which is not giving me enough ROI, return on investment, that I should look at not incurring or reducing significantly? Or take a call, no, I would still incur because that item of expense may appear to be an expense in my P&L, but actually is an investment for me because it will reap me benefit in time to come. So you'll have to take that conscious call of which cost is an investment and which cost is a true expense, and then segregate what to spend, what not to spend, where. A lot of startups, MSMEs, in the initial stages, try and look at building business by volume instead of fast, where you just acquire customers. When you acquire customers, the cost of acquiring customer is huge, which means you start to incur losses, which is what Swiggy, Zomato, Paytms, and all of big unicorns have done. That is a model which is used now. In the past, with all the corrections in the startup industry, investors have stopped to look at volume acquisition as your metric. They are looking at your unit profitability, then converting it into numbers, and then seeing what's the total profitability. Now, in the wake of bringing valuation to the business by numbers or acquisition, people stop looking at the value that they add. Now, you may add value to a customer, but if it is not financially adding up, it will not make sense. Which means when people are running for only valuations and acquisition, people end up raising debts from market, raising equity from market. Generally, for a startup which is a small startup, you rarely get equity. You would take debt and say, I will scale it to XYZ, and then I will convert this debt into equity by raising funds from somewhere else, and then so on and so forth. But it ends up putting you under pressure of interest cost, which is fixed for a monthly basis. You should look at your debt management very, very, very carefully to see whether you want to take debt or not. If at all you want to take a debt, is it a loan or a credit line? Can business meet its minimum interest cost or not out of their own revenues and profits? If you end up not being able to fund the cost of debt, then you should not look at taking a debt. The third is when you take on debt, what happens is, because your equity is limited, you start an organization to begin with. Generally, when you register a private limited company, you start with a capital of lakh, 2 lakh, 10 lakh rupees, and then say, जो जो पैसा चाहिए, we'll pull out either from our
सर
pockets as
स्लाइड
loan.
मूव नहीं हो रहा है.
हाँ, स्लाइड मूव नहीं हो रहा है,
Yeah.
स्लाइड यही है,
अच्छा अच्छा
स्लाइड यही है। आई एम जस्ट कवरिंग फर्स्ट पॉइंट देन आई विल मूव टू नेक्स्ट पॉइंट। ठीक है? सो फिर क्या होता है, फिर आप चाहते हो कि मेरे को कैपिटल स्ट्रक्चर में इक्विटी आई हैव टू कीप मिनिमल। If you keep equity minimal and debt high, be it your debt or a bank's debt, your capital structure of the balance sheet goes off, which means you tend to become an organization which people will avoid to fund in future unless you manage it right at the right time. So वो भी आपको देखना है मनी मैनेजमेंट में। इट इज नॉट कि पैसा क्या आ रहा है और जा रहा है, इट्स नॉट अबाउट ओनली इनफ्लोज एंड आउटफ्लोज, इट इज अबाउट हाउ डू यू मैनेज योर बैलेंस शीट ऑल्सो। Now, for any business to run consistently for future, important is then next to have emergency funds in place, which is part of your planning and control. How many months operational expenses are there in your kitty as emergency funds? If at all your payment doesn't come, if at all your creditor do not give you let's say a credit for the time period that you want, you need that money. So what is that fund? If something like a pandemic happens, what is that fund to survive? That is an important aspect that needs to be built in for an effective business to have in place. There are other parameters like a financial control, tax planning, internal controls, investments, and all of that, which is slightly complicated to share. If you need, please drop me a message and I can have a separate session dedicated for you on that, which is part of planning and control itself.
Pankaj,
Yeah,
hi. There is one question that a lot of startup founders, ask me. I thought it may benefit some of the people here,
yeah.
which is that when they set up a company, so in the initial days, you're a pre-revenue generating setup, but
Mhm,
you've obviously like set up a private limited or whichever format that you've gone ahead with. Uh, the question always is, how much do I pay myself as a founder? And are there any like guidelines of, because you've started the company with a say a 1 lakh or
hmm,
whatever,
yeah.
or 50 50,000, yeah, jo bhi hai,
जो
whichever
भी
format,
yeah.
and you're not making revenues. You know clearly that you're not going to make revenues say for 6 months, whatever
Hmm,
the time period is.
hmm,
um, uh, how do they put in money back into the company as like technically as directors of the company?
hmm,
How do they and
hmm,
which is like provisional as to how you can run the company. And the other is it okay for the founder director to then start paying money from that loan
hmm.
to themselves as salary, because that's also part of a P&L structure. So
Yes,
you
yes.
may want to just shed light on that.
Definitely. That is part of my section 3 in the money management. I'll still answer because that's important. So, one, you can pay yourself as salary being working for the organization. Number two, uh, should you be paid salary as director? Yes, you should be paid salary as directors. Third, you need to plow in money to fund the business and plow out money to fund yourself or your running expenses, which is in the form of salaries. So these two things are absolutely different. For the amount of money that you have decided to plow in, you should plow in, and that will be treated as loan. Till the time that money that you are plowing in is not taken from a party outside of you as a loan, it is okay. But if you take loan on yourself and fund it in the business, that's not allowed if you are a private limited company. Okay?
So then
Correct.
in that case, we don't take the remuneration, right?
No, 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 I'm coming to that. So one was the flowing. How do you plow the money in? I'll talk about plow the money out. So you, whether you take remuneration or not, we'll talk. So if you are borrowing from someone and putting the money into business, that's not allowed as per Companies Act. So private limited companies cannot do it. If it is your money, you can plow as much as you want in the business to fund the business. So let's say you raised, let's say 1 lakh as capital while setting up your organization. You borrowed in your company, that is treated as loan in the books of company, which is come from you. So that flowing is taken care of. Now when you want to take back, how do you take back and what amount do you take back? How is, yes, salary you can take or a consultancy fee you can take, beneficial is salary. How much is now a question of two things. One, what is the minimum amount that you need on a monthly basis to incur your day to day expenses, your personal day to day expenses? Second is what is the amount of money that your business needs to be in it for its survival? You have to balance the two. Now there is no magical number says which says let's take 25,000, let's say 25 lakhs. No such number. If your needs can be met in 50k, please withdraw 50k so as to ensure your business also runs. If your needs are 50k but your business allows you to withdraw only 25k, then I would suggest you still withdraw 50 but try and plow in another 25 through your account or your family member's account as loan, because you would still need that expense for your own personal expenses, and that expense is a company's expense in form of salary because you are working for the organization to get the organization a business, and you get tax benefits also in the company books.
Pankaj, I'm not clear about the sourcing the funding, matlab from
Okay.
self or from friends and family. Like that's a little confusing. So
Ha,
what you're saying is, if I loan money from my account, from my personal account to my company's account, then considered as a loan,
yes,
and that will be like in that scenario, I'm allowed to take salary back.
you are allowed to take salary back in any scenario.
Okay, okay,
That's number one.
okay.
Now,
Got
how do you use that money? How much is the salary that you will take back is the question,
No, no, that I understood. I didn't.
right?
What I didn't understand is the difference between funding my business from my own money versus funding from taking loans from family and friends. So that I have a confusion there.
Okay,
So what is better? Which
okay.
one works?
So, so you can take money from your own pocket and from your friends and family. That's number one. If you take a loan from a bank and then put that money in your business, that's not allowed.
Okay, a
Clear?
personal loan, like a personal loan for the business, does not work.
Personal, yes, yes,
Okay,
that's not allowed if you're a private limited company.
okay, got it.
So it's like this, Preeti. You need some kind of working capital, right, to run your business. Okay,
Yeah,
and you may not be generating revenues. Now you've set up your company structure, keeping like a 1 lakh token amount or 2 lakh token amount or whatever it is that is required to incorporate a company. But that's not good enough for you to run your daily expenses, like Pankaj is saying, right?
right.
So, in which case, now if you as a founder yourself put in money into the company, say to the extent of say 10 lakhs, 20 lakhs, whatever, it will be deemed as a loan. I think the
Okay,
point Pankaj is money on that in your personal account, put it into the company, and then deem that as I think technically that's not allowed.
okay.
Yes,
But as a founder, you can put in that money. It's almost like if you're going out and raising funds, and supposing Pankaj invested money into your company as an investor,
Mhm.
then you anyway had money to run with it. But when you are investing as an investor, that is not seen as a loan. Pankaj, just clarify that. No?
yeah,
Yeah.
So
yeah,
just to
that position
simplify
is
this,
right.
let's say that Shanaz is funding my business and she invests directly into my private limited company. So that is the funding of an investor. But if Shanaz were to give me a loan to my,
Mm.
which I take in my personal account, and then I transfer it to the company's account, so that will not work.
So it is, if Shenaz has to invest in your company, then there has to be an investors agreement or a shareholder agreement for her to be able to put in money in the business.
Got it. Understood. Understood.
Now, if that investment is happening that to you,
Hmm.
then it is not company which is getting funding. That is your personal goodwill which is getting you funding.
Right.
Now, to the extent of the funding that you get on your personal goodwill for you, it is okay, but it cannot be then invested, then cannot be taken as a funding for business. Now what happens is people generally take loan on their own names just because they've got a good credit history from banks and then use it for business purposes.
Okay.
If they are not able to pay it back, bank cannot put a claim on company, and since they are individuals and if their net worth goes upside down, then bank cannot claim it from them also. So what happens is the financial efficacy of loss. Hence the bank funding is not allowed directly.
All right.
Now personal funding, like let's say Shanaz puts give it to you and
Yeah,
you put that
Pankaj,
money into.
sorry to interrupt. Like, I need to add one more question into that. So, suppose I am taking one loan or OD or whatever from bank, and that money I am putting and investing or putting that money into my private limited account, private limited business account as a loan. So that loan, what I got from the bank, that will be my personal responsibility to pay it back, and the company where I put the money as a loan, that would be like business process. Whenever is required, I can, or whenever is the possible, I can like withdraw it back or something, right?
So if it is your own company and not someone else's, then you cannot do it because law doesn't allow you to do that, be it in the form of OD or a loan.
Okay.
No, so here's the thing, Pankaj.
Mhm.
He can easily go to a bank and ask for a loan from the bank to fund his business, right?
Absolutely.
That's so. I think just clarify that because I think they're getting a little confused about taking a loan in their names versus taking a loan in the
So
business's name.
okay, let me clarify that. So what happens is when you approach a bank, you approach a bank to fund a business for which bank needs a business as an underlying asset. Now that business could be your own startup, which may not be profit making, which may probably incur losses for 2 3 4 years, and bank may refuse you that funding कि बॉस प्रॉफिट तो है नहीं, पैसा कहाँ से आएगा. If bank does so, now what happens is for people to circumvent this, they instead of taking a business loan on their business, they take a personal loan on themselves. Because I have a credence, my bank statement is okay because I've just left the job, let's say 3 4 months back, and salary slip was there. Bank will not ask for other things, so I'll take loan basis my credit score and my old salary slips and take the money. Once you take that money, that becomes a loan in your name. That is not loan on business. And now you smartly, what you do is you put that money in your business ka bank account, saying since it is my business and my loan, I can use it either ways. In case of a private limited company, that's not allowed. Is it clear? Any better?
Yes, yes. Understood now. Got the clarification.
Yeah.
Yeah.
Okay. So we move to next
Yeah,
section, or
Pankaj,
but
I have one more question. Sorry.
yeah, no problem.
So it is like, suppose it was the need and it was the very urgent situation where somehow I need to arrange the money and put it in my business account.
Hmm.
Okay, that could be from bank, that could be from my friend or my family members. If somehow I am arranging some required fund and I am putting that fund as my personal uh, uh, commitment and put it as a loan, then what would be the like way out to resolve this issue, or like to display in the balance sheet or something?
So since it is not allowed, you will have to resolve it as soon as possible. The balance sheet date for India compliances is 31st of March every year. If you can pay it back before that, you can still be clean on law. You can pay it back by director and then repaid back during the year. But that's the way you could look at making a short term arrangement.
Okay.
Also, one more thing, Pankaj, I want to ask is if at all my friends and family somebody wants to invest and they do not want to have a investors agreement. So then, what is the way out in this case?
Then you do a loan agreement directly in the name of the company, not in your personal name, so that they fund directly the organization and not your bank account.
So this can happen without an investors agreement. It will be
Yes,
like
this
a
can
loan.
this will be a loan which happens through debentures agreement.
Okay. And is there a
So
standard like rate of interest for this, or this is mutually like agreeable, or
it is mutually agreeable. You'll have to do a debentures agreement, not an investors agreement.
okay, got it. Thank you. Thank you.
Yeah, no problem. Okay, let's then move to day-to-day cash flow management, which is operational cash flows. Now, when you've looked at budgeting, planning of cash, how do you look at managing them on a day-to-day basis? Because eventually you'll have to try and make sure that your plans fall in place and they give you the desired results. So, for them to give you the desired results, you'll have to follow some principles which will be basis your specific business and market that you work in. The ground rules being cash reserves. You should make sure that the cash reserves are kept always in your bank account at an optimum level suitable for your business. And anything which hits the emergency fund, the cash reserve, have a plan in place in time to come, because there will be situations when you'll have to use that reserve fund, but then you'll have to proactively look at utilizing them in such a manner that as soon as money comes in from somewhere, you fill that gap. Second, see, there are limited sources of getting money for the business. One is obviously you've spoken about is funding, investment, debt, equity, whatever. Second important source is that you get money from your customers. Now, getting money from customers is not easy in any market, and India being one of the toughest. You'll have to look at putting right systems and strategies in place to get the money on time from people, which means you should know how to raise an invoice, which is a valid invoice, a tax invoice if you are a GST registered. If not GST registered below threshold, then otherwise the invoice. The invoice should go in time. You should have a contract on email or a proper signed contract, a customer and a vendor type of a contract, which should have payment terms written in there. You should have a process to send reminders on payment terms. You may look at giving people cash discounts if they can make you early payments, because cash will fuel your next level of investments, fuel your next level of spends that you want to make. So you'll have to look at getting paid in time or before time through means which help your business, but not push you hard on your profitability. Debt we have spoken about, so you should have a system of funding the interest portion of the debt as well. If you are looking at making some investments which are strategic capital investments, then you should look at making sure that you spend on those capital aspects and get a better ROI from there. Spending again self-funded, bank funded, investor funding funded, but you should have a tap on which capital expenditure, and that capital expenditure will give you a return on investment in how many months, days, years. The That's one of the leakages of spend or cash. Second is vendors. Now, while you would chase your receivables, vendors would chase you as their receivables. So you should have negotiated with them right payment terms. You should manage their processes also well. If their invoices come in time, you should account for that in time and try and pay that in time. Because if you'll pay them regularly in time when you have got money, one fine day if you don't have the money, then those vendors will help you, give you extra credit. Those vendors will help you, okay, no problem, you're still sending material because you've been consistent in paying. So you'll get another set of inventory in for you to then bill your customer and get money back. So you'll have to look at those things strategically and tactically both. And these vendors could be your material vendors, your consumables vendor, your maybe insurance companies, your repair, maintenance, marketing expenses, travel expense, professional salaries, and all of that. So you'll have to look at picking on each of the categories very, very specifically, and then deciding how you should want to keep payment terms for each of them, and how and when you would want to utilize them if there happens to be such need in the business. Then cost reduction we've spoken about. So once the cost is on plan, you have to ensure that happens on the ground in real time also. You run this process on a regular basis. Generally what happens is startups and MSMEs say we are so small, it doesn't matter for us to look at our finances on a daily basis, on a monthly basis. We may look at it, let us say, once in a quarter also. But that is not true, my dear friends. The smaller the organization, the more important is to look at finances in as much frequency as possible. I have guided startups look at their finances as frequently as daily basis, because you should then be able to put the levers right at the right time on the right thing so that you are okay for tomorrow. And once you do it on a regular basis, if weekly, if daily is too much for you, maybe you do weekly, but whatever pattern you, whatever frequency you choose, start analyzing that numbers. You start to see patterns, which vendors are accommodative, which debtors or receivables are accommodative, which costs you can use as leverage to fund something else, and so on and so forth. But these patterns would come to fore only when you'll start to analyze them, monitor them on a regular basis, and come to a solution which is time tested for your business, that will help you. That's the part of the operationalization of the cash flow. Any questions in this section before I move on to reporting compliance?
All good. Thank you.
Okay, okay, okay. Let's move on to MIS, monthly information system. Now, MIS has got two major wings. One is the operational MIS, second is the financial MIS. Let's talk about operational MIS. Operational MIS is nothing but the systems through which you monitor the business on a daily basis. How the specifics, sorry, how the specifics in your business is moving on a daily basis, on a real time basis. It may mean ensuring that what sales has happened yesterday, what is the inventory that I have as on today, how much is the production which happened in last 6 hours. Those parameters, those matrices are very important to look at how operations in your business are moving. This helps you make the right decisions for the business. For example, you know that your production in, let's say, last 6 hours has been X. Then you can look at, now if 6 hours is giving me X production, how much would 24 give me, and how do I make sure that by the day end whatever is the production tomorrow can move out of my godown and reach market. Because as soon as it goes out, your recovery cycle starts. It will reach your distributor, it will reach your customer, and then you'll start to raise invoice and start to get paid, which is where your operations in the business will start to help you taking financial decisions right. And then this will feed onto your financial MIS. So this decision making is extremely important. How you look at decisions, these matrices is up to you. You may want to look at it in form of charts, you may want to look at it in form of graphs, tables, whatever works best for you. But have a process in place, because these optimize your resources as well. For example, you took an example of production. If your production is not right, then it will be you who will be looking at what led to a lower production. Is there something that I could do to probably utilize my resources optimally? Is there something which is not happening right on the production floor which needs to be worked on? So these resource utilization, hints or challenges or risks would come to fore only when you'll start to monitor them on a regular basis. There are other operational MIS also which needs to be looked at, which are like for example an MIS on how the customer relationship team is working, the customer care team, customer relationship team. Is there um, okay performance, not okay performance? The call hold time, the call active time is right or not? Is there something that I need to do better for customers to feel valued? So those things will come out of these operational MIS only. Now, operational MIS will then convert into, as I said, the financial MIS, which is the matrices. Number of units sold yesterday times the price per unit will tell me what sales did I make yesterday. Now if I have got a 10-day payback period, then the sales which I got done yesterday shall be paid to me on day 11. If that money comes to me on day 11, I can at least start to plan on day 11 and onwards from that money how much is it that I need to spend, where, so that I then have a plan of utilizing that money as soon as I receive it, which brings efficiency further in the system. That may mean that of the money that I receive, 40, 50, 60% of that may go in buying more raw material as an example, or doing some capital investment if the value. So this operational MIS will start to drive your financial MIS. The difference which I'd like to call out here is, generally, entrepreneurs treat financial MIS as a post facto report, that it will tell you what has happened in the past, and therefore the forecasting is not valued much. Which means you'll say, "ठीक है, whatever I have done, I am being paid for that, so that's fine." But once you do it on a consistent basis, it'll give you trends of how this trend, which has happened in last maybe 15 days or 15 months, will help you plan your future ahead. So all your lagging indicators in the financial matrices or MIS will help you become a leading indicators, which will help you forecast better, which will help you budget better, which will help you give better financial reporting, which may help you do a good compliance management, because a lot of numbers would already be available with you. It may give you a sound audit trail for people to come and vet. It could be your potential investors coming in and doing due diligence on you. It could be any auditor coming in. It may give you track of better expense management, maybe revenue monitoring, risks that may come out of this, of let's say falling short of cash at a point in time, or risk of market change hitting you in future. How do you address that? Any credit risk which comes into play, saying, if I run my business this way for next 8 months, my credit rating would go off and no one would fund me, as an example. If my volume of data in the operational financial MI is huge, then I might need to look at implementing an ERP in time for business for it to scale. So all those futuristic decisions would come in place when you would look at preparing the MIS right at the right time. So it kind of becomes a necessity on a regular basis. Now, the next item is accounting software. Accounting software essentially is something that you need to decide basis the cost that you want to incur and how did you budget yourself. The cost could mean that I don't want to incur anything on my accounting software. Then you may look at having a lot of free accounting softwares. For a lot of organizations which are smaller in size, there are um, free billing softwares available, and that's the only accounting that you may want to do to begin with. Saying that my invoicing is taken care of, I will take care of my collection separately, my payable separately, and do only invoicing. That's one thought. You may want to look at enhancing it to a full-fledged accounting software which will take care of your expenses as well. Then there are a lot of softwares available in market which give you free subscription, like Zoho for an example. It gives you a free subscription. Do take that, start to record your numbers in there. You can do a lot of things yourself. It's very simple. It doesn't need any technical accounting knowledge. It in layman terms gives you a lot of things. You want to try your hand on that. If you are a little savvy on financial terms, you may look at traditional time tested softwares like Tally, Busy, or something. But you will have to look at finalizing one basis the size and scale of your organization, and may reach up to a stage of ERP where SAP and Oracle and other comes into fore. Yeah. So that's the thing that you have to take care of. The next is importance of budget. We've spoken about, so I'm kind of skipping that. Financial goals. Now this is an important one. I am really not sure how many of you have looked at tracking your financial goals, or how many of you have your financial goals. uh, Financial goals, first of all, have to be absolutely different for you as an individual and for you as a businessman or an entrepreneur. Your financial goals should be independent of your organization goals but feeding each other. So your organization's goal could be that in next 3 years you want to grow 5x, 10x, 15x, whatever. In that, your financial goal could be that through this business I should make this much money, which could serve me for x number of months, as an example. But those two have to be different yet dependent on each other. Tracking them is an important aspect. All your goals that you set up for your business and for yourself have to be time bound. So it has essentially to be smart goals, which is specific, measurable, realistic, accurate, and time bound. So they have to be smart, and they have to be looked at in a or reviewed in a regular frequency. Regular frequency for a few could be monthly, or a few could be, as I said, quarterly, yearly as well. But have KPIs in place, do have goals in place, and start to monitor on a regular basis for your own self. That's on the first slide. Before we move on to next slide, any questions? Okay, we move to the next one, which is contracts. Now, while you are setting up your businesses, you are at different various stages in your business life cycle. In the initial stages, people tend to ignore the contract aspect of the business, because a lot of things happen fairly well when it is verbal. A lot of things are treated as okay, someone has said, so it will happen, right? But what happens is, when things go south, then you are struck, because a verbal agreement do not have any standing, be it in the court of law, be it the arbitration or a counseling sessions where you settle your disputes. It may not have any standing because the versions of two people would be different, and that's why you'd be standing in a court of law or arbitration kind of a setting. So important is to have basic basic contracts in place. They may not need to be a 20 or a 40 pager or a 100 pager contract as they happen in most of the legal contracts, because they want to make it comprehensive as much as possible. They could be simple 1 2 3 pager kind of a contracts, or rate agreements for that matter. And you should just implement that, and that is enough. The question comes is, now if I implement it, how do I decide which contract takes care of what should be terms and conditions, which should I prioritize? So the type of contracts that you should prioritize is what I've listed on the left. You should have all the sales agreements, or the debtor or a receivable agreement with your customers, which should talk about what does sale mean to you and to them, what's the price quantity that you want to deliver, what are the payment terms, what are the legal implications of signing the contract, how do we, and how do you enforce. These are 4 5 key things that you should look at putting in sales agreement. It is absolutely doable in 2 to 3 pages at the max. Then There are certain service agreements that have to happen, which are
Pankaj,
like,
sorry, I have a question here.
yeah, please.
You said sales agreements with customers.
Yes.
So, the retail customers, what kind of customers are we talking about here? What kind
So,
of sales agreements?
this is B2B when agreements happen. When it is B2C, the invoice itself is treated as agreement, but you have to make sure that the invoice clearly mentions any terms that may happen. So, for example, if I purchase something on Amazon, it says that it has got, let's say, 5-day replacement or 10-day return or whatever. If I'm buying it from there, that term of a contract is signed by me as soon as I click buy. Invoice comes to me without any terms, but I'm bound by what I saw when I clicked.
Okay,
For your own websites, it is important that when you send an invoice, there is a section of notes in that. You write few notes there saying this is returnable, this is not returnable. If used, it will be treated as sold, whatever. So
okay,
that becomes a binding contract. As soon as customer buys, invoice is sent to them, copy is with you, signed by you, it is a contract.
okay, understood.
Yeah.
Yeah.
Okay. Next is service agreements. We are now in an era where everyone is using one service or the other, and most of them are IT services. Most of them, or if it is non-IT, then it is still dependent. Agreements are of high importance. It may be, as I said, IT service agreement or a marketing service agreement, maintenance service agreement, consultancy agreement, legal, security, whatever names you can think of. This These agreements are important, and it is important for you to define what is the service that you are getting from the vendor, and how do you define their scope, how do you define that service will be treated as delivered, what is the timeline, what payment, is there any intellectual property involved or not, if it is involved, whose ownership will be of that intellectual property, how do you take this agreement to closure, if at all you want to take it to closure at any point in time mutually. What if there are disputes, how do they get taken care of, what are your responsibilities, what is the other person's responsibility, potential liabilities that you can think of in a service agreement. Put all that on a piece of paper and get it signed. You will face problems in initial 1 or 2 or 3 contracts. That's the journey that every entrepreneur goes through. But once you've done 2 to 3 contracts, you'll get to know what kind of questions get asked by people and how do you address them. Once you've crossed that 2 to 3 contracts come milestone, it'll be easy for you to get this done for others also. A lot of people do not have an employee agreement also. You interview a person, you say, okay, you are hired, on your CV I've written this much is your salary, you'll get it by this date. You don't sign anything. If that happens to be the case, then you are actually standing on a risk, because a relationship may get sour between employer and employee. There could be issues regarding your confidential data. There could be issues regarding benefits that they'll give you, clauses, compensation, conditions, and so on and so forth. So try and avoid all of that. Have a simple two-pager employer agreement which takes care of what you want the person to sign and what you want are okay to sign. Just have that in place, and have few inclusions of data privacy breach and non-solicitation, all of that. That is another important thing. Next is NDAs, non-disclosure agreements. Now this is quite a tricky one. Whenever we are about to get a contract and my customer or a client says, I would need to sign an NDA with you because I cannot share my confidential information with you, we will be the first people to say, okay, yes, please send us the copy and we'll sign it. We may not even read it and sign it because it's a business that we are getting, and NDA doesn't matter. But when it comes to getting NDA signed from vendors, we have on our own hesitations and forget about what vendor or my service provider will say. This mindset has to change. First of all, even if it's a customer NDA, you should read it thoroughly. Get clarifications on any clause that is not clear, and give your suggestions to get it amended if need be. For all your vendors and service providers, please incorporate that as your onboarding process. Have a small 5 pointer checklist that I'll need your KYC, I'll need your GST, I'll need your whatever contract, and I'll get you sign an NDA. Maybe 5 pointers, and get that as a part of process, and have them also sign it. It will save you loads of risk. The work that we do, maybe in the EV space, maybe in the education space, or Preet, in your space, these are high risk items. There could be a lot of confidential nature of work we do will go to them, and we should have some legal protection against them. Next is your lease agreements. Generally, we get speak to people. We say, okay, I'm taking this premises on rent, and I am okay for you to pay you for me to pay you this rent, and we are done and dusted with it. Have the agreements in place. You never know when you'll need it. So you should not compromise on having any not having an agreement. You should have a lease agreement also in place. It may be registered, well and good. If not, there are other provisions in law which allows you to not get it registered. You may want to follow that and get it not registered, but have one document in place. So that's an important aspect. Now let's talk about other general conditions which are applicable on all the contracts that we've spoken on the left, and these are, by the way, only top 5 6 contracts. There are other contracts also, but these are like imperative. And you have all your operational aspect of what is sale, what is purchase, what is scope of work, and all of that. What are other terms and conditions that you should look at writing? What are performance expectations? Any deadlines that you're looking at? Anything that raises ambiguity between service and delivery, you should write it so that there is no ambiguity. You should write it in as much simpler form as possible. A plain vanilla English is okay. You don't need a technical legal English to be written in a contract. A vanilla English which is agreed between two parties, okay as a contract. Nothing more than that. You should talk about rights and obligations that both the parties have. A lot of times, projects get um, fail just because rights and obligations are not drafted agreement, properly, and every person thinks that it is other person's responsibility, and you flunk. So don't do that. Have those obligations in place. If any party breaches any condition of the contract, what will happen? That should be written in your contract. It may include financial penalties, it may include termination of an agreement, it may include indemnification of the loss that the other party faces because of someone else's mistake. Please have that in place. Last but not the least, if there are any legal reviews required, any high value contract, any contract you think that you should have someone review it, please have a review mechanism in place. If volume of contracts is huge, have someone by your side on a regular monthly basis. If it's one off, please have someone trusted in your network to review it for you. That's absolutely important. A stitch in time saves nine. Okay, any questions on this slide before we move on to next?
Good stuff. Thank you.
Okay. uh, we come to the last segment of the discussion, which is regulatory and legal aspects. I'll quickly talk about these aspects. Business structure, absolutely important for you to decide which structure you want to run your business with. Structures available in at least Indian context are a sole proprietorship, a partnership, a limited liability partnership, which is registered in all 50 states, a private limited company, a one person private limited company, a public company, are key considerations of the work that a structure can take, the structure that a work can take. There are other aspects also. You can have a NGO also formed with MCA. You can have a society also formed, but that's not something which is more uh, frequent in the market that we see. So I'm kind of excluding that. Every structure that we've talked about has its own compliances, has its own nitty-gritties to fix, and its own risks also. For example, proprietorship is very simple to form, but very, very, very risky to operate, because all the liabilities in the sole proprietorship environment is the liability of the proprietor as a whole, which means his or her even personal assets can be used to repay any liability which may arise out of business. Whereas in a private limited company, the liability of the directors and shareholders will be limited only to the extent of assets and liabilities in the balance sheet of a private limited company. So that's the scale of difference if I compare one end to the other end. So you should be very careful while deciding the structure of your business. Whatever structure you decide, you should look at in the current scheme of things and the ecosystem that you work in. After registration, try and integrate tech into your operations. That helps your business structure to run fine and smooth. That may mean post registration compliances, that may mean utilization of platforms to form contracts for you or whatever, but have some technology integration where you don't to post right after the structure decide decision for you to make things happen.
Pankaj, that
Yeah,
OPC piece, right? The one person company.
yeah.
Again, a lot of startups, not necessarily in this group, but a lot of
Mhm,
startups that some of them who I consult with are actually OPCs.
mhm.
And I think for the benefit of the team, just like walk them through the advantages and where they should switch from OPC to a regular setup. Hmm.
Yeah. So OPC is a one person company, which essentially means when you are a private limited company, you need two directors and two shareholders to form a private limited company. But what happens if I am the sole director? I am the sole person who would be doing the business, and I don't want anyone else to come into picture in my business and want to run it off my own. And I don't want a sole proprietorship. So Ministry of Corporate Affairs came in with an option to have a company, private limited company, all the benefits of private limited company in a OPC format, which is one person company format. Your compliances are to the minimum. Your cost of operations is absolutely minimal because compliances are minimal. The change is that you get a peace of mind. You don't need to necessarily have your spouse as director. Your spouse might be working, your spouse might not be willing to be part of the organization in any form and shape, or you want to keep him or her out of it because it's your business. So that particular angle is taken care of. Ease of functioning in day-to-day operations, because audit requirements are different, not as same as private limited company. Maintenance of books of accounts mandatorily are different. You would obviously want it for your business monitoring purposes. The disadvantage of OPC is that every startup who is now looking at having a startup registration and benefit of startups, and OPC will not give you that. It is only the limited liability partnerships and the private limited companies that will get the startup benefit. And those startup benefits are, are a lot. You would have read it at a lot of places. It gives you tax exemption, it gives you angel tax, etc., etc. The problem now is how do we look at moving from an OPC to a private limited company when I've got funds, my business has started to work fine, and how do I then get the benefit? As of the current legal position, an OPC converted into private limited will still not get a startup certification. People get it. It's not that people don't get it, but then they declare something which is not right. But by the law, it is not allowed. So they get it or they don't. If you do not get a certificate of a startup registered, then all your benefits are still gone. The only thing that you can get after converting from an OPC to a private limited company is that now you can invite investors from outside to invest in your company as a debt on equity. So the funding aspects to the extent of a private investor gets open in whatever format. The debt aspect of your business from a bank was in any case open while you were a OPC or a private limited company. These are all operational differences of OPC and private limited company. Any questions?
Works. Thank you so much.
Okay. Now we move to the next aspect, which is financial compliance. Financial compliance mean that you will have to comply with accounting standards, which is first compliance, which is published by Institute of Chartered Accountants of India, which is adopted by Ministry of Corporate Affairs in the Company Act, which means any company is a private limited company has to mandatorily follow the accounting standards and the reporting standards and the auditing standards, and they have to report their numbers accurately and submit to the authorities, also to the stakeholders obviously who have invested kind of money in that. That's one of the compliance. LLP doesn't have as detailed compliance as a private limited company, so is OPC. Partnership firm or a sole proprietorship have a fair amount of relaxation if you don't exceed a minimum threshold limit of turnover and the investment in the business. If you have taken advances in an organization to the owner, which is director and shareholder, or given advances, that's not allowed giving advances to a director in a private limited company format, but in case of a partnership it is absolutely allowed. So that's a compliance that you have to take care of. There are tools which are available which gives you flexibility to automate the financial reporting and figure out discrepancies which are non-compliant for a private limited company. So you can get a pop-up saying, while this transaction is there in your books of accounts but it doesn't comply with XYZ clause in the law, but that gives you that ease, but you will still have to look at figuring out how do you do it. So that's the compliance and how you think about system, taking to make a note of everything that this is not allowed, this is allowed. Tax compliances, there are a lot of tax regulations in the country. Sales tax, which is GST, income tax, employment tax or a professional tax in various states, and all of that need to be taken care of. There is definitely the tax which is a TDS, which a private limited company or a company who's required to get their accounts audited need to deduct for their employees, also contractors, also professionals as well. If they are beyond, if the amount of invoice is beyond a particular limit, employees, if the salary exceeds the amount which is not chargeable to tax, so those compliances are to be done. You should be aware of those compliances and how and when do you start to work on it is an important information. Again, tech plays a very big role. Just enroll to any of the available free newsletter or or a service which wherein you just feed in your company details and tell you what compliance is applicable to you. It can send you reminders also to streamline your tax compliance. There are softwares available like a Razorpay, which gives you free computation of tax to be deducted on employee salary, on consultants and all of that. That calculation comes to you, you start to see what needs to be deducted. Payment you can make of your own self and file the returns to the department. That's something that you need to do on tax. While we are on tax, in any case hits entrepreneurs a lot because it takes a fair chunk of your money to the regulators or department. Now when paid, there is at the same point in time opportunity for you to look at optimizing your tax. look at ways and means of doing a tax planning. And I'm emphasizing planning because tax planning and tax evasions are two different things. Should look at planning your taxes well as you do your finances, so that it helps you define what is a legitimate expense, what is not a legitimate expense, and uh, how do you use legitimate expenses to your advantage and save taxes on that, so that your cost of tax also gets minimized, because that whatever penny you save out of not paying tax, which can then be used back in your business to give you more returns. So those kind of things you have to look at evaluating for your business. Yeah, that's on tax. Regulatories, we've got returns to be filed with ROC, with income tax, with GST. If you're an MSME, then you've got if you're doing business with an MSME and you're a private limited company of whatever size, even if your turnover is zero, you have to file a regulatory compliance of how many MSMEs have you worked with in the year, and have you paid them in time or not. So that's one of the compliance which people are not at all aware of. So that is something that you need to look at fixing in your organization right from scratch, be it a revenue making or a profit making organization or not. So that's really important. Now, last kind of section of the presentation and most important is the law and compliances specifically for tech enabled company. Of you are in any case utilizing technology in whatever form and shape in your business, small or big. So we all should be aware of what laws are applicable for any technology that you use. For example, if there's an app where you're gathering data, tech is there. If there is a WooCommerce website or a WooCommerce app where you're, or a Shopify, where the orders are being placed for your business and you're fulfilling those orders, the tech is there, laws are applicable. If you are providing, let's say if you're in net tech, then obviously tech is there, so you'll have to be wary of what laws are applicable, and then see what is it that you need to comply with on a regular interval. So first law which is applicable to you is an Information Technology Act, which governs the electronic transactions, and it also governs the digital signatures that you all must be having if you are a private limited company in any case. It gives you framework for e-commerce activity tracking. How do you collect data, how do you not share data? Like we have got GDPR rules in US, we've got data protection laws which are presently not approved, but then on the similar lines of how do you protect data of the customer not being misused, not being sold, etc. There is Consumer Protection Act, which empowers consumers with their right uh, and protects them in, at least in the e-commerce landscape. Utilization of the Consumer Protection Act is huge. You should be aware, so that if someone kind of files a claim on you, you should know what to address, how to uh, be fair and still not being hit by misuse if someone is doing. What are the fair practices that should be implemented in your organization with your customers? What are the intellectual property laws, what is IP, what is creative work, what is an invention, what is branding, and how innovation can still evolve while you comply with the laws, and what is the first right to claim that innovation, and how do you protect that for the whole life of the business. There are cyber security laws which talk about misuse, unauthorized access of computer system, data breaches, attacks, and all of that, that you should that you need to look at and have in your business, things in place in your business. There are electronic signatures which you do. How do you use that? What is the difference between a signature which is scanned in your system and pasted on an invoice vis-a-vis a digital signature? That you should understand. There's a separate subject, that how you should differentiate the two, and how do you ensure that transaction, even if it is happening electronically, which is paperless, still effective in terms of electronic signature vis-a-vis digital. So important. There are telecom regulatory of authority of India, which is TRI regulations on how do you use consumer database, how do you do calling to them if you want to call your customers and sell some products, maybe existing or potential customers. You should look at that. Those are really really important things for you to stand by in your organization and give your consumers, clients, customers a comfort that you are absolutely compliant in whatever you do. Yeah, this is a small connect with us kind of a slide where we've got various options to connect with us. If at all you want to, any questions you have, you can reach out to us through these channels. We'll be happy to provide you answers. And yeah, yeah, that is kind of all. And all the best.
Thank you, Pankaj. That was brilliant.
Thank you.
Very good explanation, understanding, dumbing down of a lot of concepts that startups have to also deal with.
Yes.
Uh, and every founder is not like necessarily bothered about these things, but they have to, deal with them on their daily levels because they are founders. So they have a kind of a regulatory role to play as well.
Yes.
But yeah, this has been extremely helpful and very interesting, really.
Thank you.
Eh,
Thank you.
I'm sorry
Yeah.
I derailed you with a couple of questions in between, but like I thought that it will benefit the startups.
Yes. Happy to take as many questions as you want.
Yes, and everyone, can you come into frame for a minute so we can take a pic with Pankaj? How are you, Partha? Hi, Preeti. Good to see you.
Yeah.
Same here.
Hi, Zainaj.
Hi, hi.
Hi.
Hello, hi, everyone. Just quick picture opportunity with Pankaj, please, since he's taken so much of time and effort.
I think Pankaj himself is not there.
Yes.
His screen is visible.
No, I'm there.
He's there, he's
My
there.
screen is,
I can see him.
Okay.
I've got two screens which you can see.
Yeah.
Okay.
Rajesh, you want to come into frame? Okay, let me just take a screenshot. Everybody's mind. Thank you. I will send
Thank
it.
you. Yes, please. That'll be useful.
Yeah. Any questions anyone has of Pankaj? I mean, anyway, luckily we're all connected in the group. So Pankaj not going anywhere, and you
Yeah.
have his numbers, so feel free to tap him as much as you like. Partha asked, I have a feeling he'll have many more follow-up questions, and
Yes,
he needs some
just
help
one.
from you.
Yes, just one question. In the current scenario, I have like, I know there are so many compliance, and even I came to know so many informations from Pankaj today. But in this current stage of our startup, even like our minimal like opportunity in terms of our knowledge and fund, so we we know we are so many compliance that we are not able to follow as of now, and even like we don't know when and how we could be able to follow those things. But if we are missing any compliance process or missing any things, like how could we address those in a immediate basis, and what would be the danger out of it?
So, good question, Partha. The danger of non-compliance will be dependent on which compliance we are talking about, because every compliance has its own pro and con of either not doing or late complying. Obviously, time complying is the best, but late compliance also is possible, where a compounding of an offense can happen through various means and forms which are as per the provisions given under the law. Important thing is for you to know which compliances are applicable to you, so that you can have a plan and a strategy to it. For the offenses which cannot be compounded, we'll have to figure out which compliance specifically is there in your mind. If you have any, we can talk of that. But if you don't, then I can speak about.
Partha, it's open for you.
Partha, do you have
Yes,
any?
yes. It is like, uh, suppose the agreement with one, the service agreement with one company, like who committed to work for us, to find the investment or to get some references. So,
Mhm.
but I didn't collect the enough informations regarding that organizations. Even I didn't like asked to modify the agreement, like if they are not able to get the commitment.
Mm.
So what would be the exit process for them? Like in that case, like what would be our step? Suppose the very practical scenario that I am facing, like after doing the agreement, I realize that like if they are not able to achieve like whatever they are committing, like then what would be the exit process for them? But I didn't ask them to add that particular clause in that agreement.
Okay. Good example.
Mm.
First of all, Partha, that is not a compliance because this is not related to a regulator. Compliance is something that is for a regulator, which is a government regulator. This is a gap in the drafting of an agreement to cover the right terms and conditions. Now, with that kind of clarity in question for both of us to understand, now the point is how do I get that clause added?
Hmm.
Is one way of working if I want to work with them in future, and if they also want to work with you in future, then drop in a line saying, hey, I was reviewing the agreement, I realized that we missed it, can we please add this and sign an
Okay. Okay.
right, which is an amendment.
Amendment.
So
Yeah.
if you and the other party is willing, this will for sure happen and you will have that clause in place, and there could be many more. The termination is one part of it, the timelines, the success fee, the payment terms, whatever, you can amend anything on a
Mhm.
mutual agreement basis. Now the other scenario is when they, let's say, had a 6 months contract with you, now it has been 12 months, they are not delivering what they were supposed to deliver, and you don't want to work with them, but there's no exit clause
Mhm.
and you want to still end it.
Hmm.
Then you should again write them an email, this was the contract, since you have not been able to deliver the service to me and there was no a clause in the agreement to continue stroke discontinue the agreement, I would like to not continue with this and treat this as formal notice of discontinuation of the contract. It stands
Mm.
terminated right from day one. Any questions, let me know. You may want to give them a 48-hour notice, please give them. If they don't respond, it is automatically terminated.
Okay. So will it be written from any technical guy or the guy like CS or CA who should write this notice, or I can write it myself?
So, any plain English is enough. You
Mhm.
don't need a technical, legal, language to be written.
Mhm.
If you want, or if you feel that the stakes are very very high, you want some other aspects of your contract covered, then you should look at speaking to a lawyer or a CA or a CS to do that for you. If it is just this aspect that you have shared, your plain English will be enough.
Okay. Okay. Thank you. Thank you, Pankaj.
No problem, no problem.
Pankaj, what's your take on the group reasons? I know you have what's your take, and is there anything that you are seeking to know from this startup world, because you're like very soaked into the startup world, quite like I am,
Hmm.
from your own perspective. So anything you want to ask the team, the forum's open to you. You can um, yeah.
No, I think good good mix of people, experience in their own fields, could
Hmm.
be, it could be at different stages of their own startups, maybe 6 months into the system or maybe 6 years into the system, different stages of startup, but good mix,
Hmm.
quite an experienced group. The only thing that I want to really emphasize, rather not ask, is, guys, do not give up. It is not an easy journey, we all know that. but giving up should not be an option for you. Look at ways and means of uh, working, finding solutions to problems. There is innovation everywhere possible. So look at creative ways of working. Have a group of people with you whom you can brainstorm with, have your ideas exchanged, talk about what next can be done, and work on it.
Hmm.
Just take every day as learning and work on it is something that I like to share. I was just listening to Preeti at the beginning when she said now I'm working on rebranding, so a lot of things have stopped.
Hmm.
uh, Probably my first take was okay, we would have still sold some bit of it and then start to rebrand, was my first thought, but then obviously she'll have her own reasons. So that was one kind of thing. I thought okay, okay, well, this is the brand, we are coming with something new, you'll see a newer version. So create that excitement for people.
I think, yeah,
Maybe.
yeah. I think in her case specifically, she stopped the advertising, as in the spending of the money. It's not as if she's gone off the radar if someone reaches out to her. But
She'll
yeah,
still have her own
yeah,
old
yeah.
brand product available. Yeah, that's good. That's
Yes,
good.
yes. The organic sales are happening. Just that I've stopped doing the meta ads and
Of
stopped
course, that makes
actively,
sense.
yeah, actively promoting and advertising for the time being.
That
Yeah.
makes
Why
sense. Yes.
burn more money if you know that you're gonna,
Of course.
benefit from a
Yes.
rebranding
Of
exercise?
course. Of course. Of
And
course.
I'm not in a very competitive stage at the moment where I'm out to kill everyone. So I'm taking it at my own pace, aram se karenge. And
Hmm.
like I have seen, it's good to grow organically than to just get cutthroat initially. It doesn't help. You burn a lot of money, and I've learned that also. So and
Certainly.
there was not proper planning when I started off. So that also, like the financial planning that we've spoken about today, Pankaj, this is
Hmm.
helpful, but this is coming to me after quite a lot of time. ये अगर इनिशियली होता ये हेल्पफुल होता हमें पता नहीं था आई स्टार्टेड विद एन एलएलपी देन आई वेंट इनटू अ प्राइवेट लिमिटेड कंपनी नाउ
Oh,
टुडे आई एम गेटिंग टू नो अबाउट द ओपीसी so the different
okay.
stages of information also flowing at different points in time, so
Oh,
it's
oh,
for
okay.
us to balance and manage and work out what works best for us.
Certainly, certainly. As I said, every day is a learning. So, I mean, I have seen businesses doing amazing through just an Insta page, right? So,
Uh,
through their own brands, whatever small, big they could be. So, I mean, no start is a small start.
no, I mean, there is a brand that I'm aware of, and I mean, he's also selling on marketplaces and very, very successful in his category. And he continues to be a sole proprietor. Making crores of money, making hundreds, few thousands or something. He's like very happy being in the sole proprietor state. So, take care.
I know of a business who's doing more than 250 crores in turnover in a sole proprietorship environment.
Oh my gosh. Wow,
And they're
that's
like,
a
ठीक है इतना compliance क्यों करना है? I was like, okay.
wow. Okay. Right. Thank you so much, Pankaj. It's really been a delight for you to take a session. And I'm sure we'll circle back again because I have a couple of more sessions going with the team.
Yeah.
And maybe like after another couple of them, maybe we'll come back and circle back with you on another session. I'll speak to you about it.
Sure, sure, no problem. We could do that.
Yeah.
And any case, guys, if you need any specific help, any specific session to happen, please drop in a note on a WhatsApp group. I'll be happy to have a session with you. And thank you, Shanaz. I think it was something that we spoke on the first session. I said, and you kindly kind of said, okay, let's do one session together. So it was an amazing thing. So thank you so much for that.
Not
And
at
thank
all.
you, guys. We'll stay in touch.
Thank you. And for everybody else, we had covered the piece about elevator pitch and understanding who your customer is and your value proposition, right? So I hope you'll have done your exercises for your brands because in the next session, we've got to cover how you arrive at your own GTM and what kind of budgets you will apportion for your brand exercises. I think it'll come like it's an interesting piece to come after today's session, which is all about finance and planning and setting the right charter for things. So I would just encourage everyone for next Friday's session. Please make sure that thoda sa wo jo whatever we have spoken of over the past couple of sessions, you just bring your focus back on that and have it mapped so that it's a continuous kind of story and learning for you, and you can see how you can apply it.
Okay. Okay.
Sure.
Yeah.
Sure.
Okay. Thank you so much, and see you next Friday.
Yeah.
Thank you.
Okay,
Thank you,
Shanaz.
Shanaz.
Thank you, everyone, and we'll connect Shanaz for the
Thank
next session.
you.
Certainly, I'll call
Thank
you.
you.
Okay, perfect.
Thank you.
Thank you.
Bye. Thank
Thank
you,
you.
and
Bye.
thanks, Bhakti, for joining in. First of the many sessions.
Oh, my pleasure. It was very
Bhakti and
fruitful.
your
And
partner.
thank you. Yeah.
Yeah. Chalo, we'll see you. Bye
Yeah.
bye. Thank
See
you.
you.
Thank
Bye.
you. Bye bye.
Bye bye.